Good day, and welcome to the D-Marq-AnalyticS channel. In today's video, we analyze 4 ETFs that we are currently not invested in. Each of these 4 ETFs carries a gold rating from Morningstar and 5 stars as well. The only reason we are currently not invested in these is due to the fund overlap with our 5 core fund ETFs. Please check out that video published on the 16th of March. Exchange-traded funds, or ETFs, are popular among a wide range of investors for building portfolios or gaining exposure to specific sectors. They can either be a part of your overall investment strategy or serve as the sole type of security in which you invest. ETFs trade similarly to stocks, but their price movements can also mirror broader investments or entire market indexes. They offer several advantages, especially when compared to actively managed funds such as mutual funds. However, there are some drawbacks to consider. Some ETFs may have limitations regarding diversification and dividends. Additionally, investment vehicles like ETFs, which track an index, are vulnerable to its performance, as they lack the oversight of a nimble manager who can protect against downturns. Lastly, it's important to understand the tax implications of ETFs when determining if they are the right investment choice for you. The first ETF in our video today is the JP US Quality Factor ETF, ticker JQUA. This investment aims to closely match the performance of the JP US Quality Factor Index before fees and expenses. It will invest at least 80% of its assets in securities from the underlying index, which represents US equity securities selected for their quality factor characteristics. Its top 5 holdings include Buffett's Berkshire Hathaway at 2.17%, Nvidia at 2.04%, Visa at 2.01%, Microsoft at 2%, and Meta at 1.97%. The fund had solid total returns over the 1, 3, and 5-year marks, beating the category index, and is ranked 10th from all 201 large blend ETFs. It currently yields 1.32% and has a very fast dividend growth rate of 28.1%. It has an expense ratio of 0.12% and $5.56 billion assets under management with 21% turnover. Onto our second ETF, which is the T. Rowe Price US Equity Research ETF, ticker TSPA. This investment aims for long-term capital growth by allocating at least 80% of its net assets to US equity securities. The advisor creates a portfolio reflecting the S&P 500 stock index, striving for returns that exceed this benchmark. Its top 5 holdings include Apple at 7.05%, Microsoft at 6.20%, Nvidia at 5.72%, Amazon at 4.52%, and Meta at 3.04%. It currently yields 0.52% with a very fast dividend growth rate of 52.9%. It had slightly outperformed the S&P total returns in the 1 and 3-year marks. It has a 0.34% expense ratio and $1.40 billion assets under management, with a turnover of 43.50%. The third ETF in our video today is the Invesco S&P 500 Equal Weight Industrials ETF, ticker RSPN. The investment aims to replicate the performance, before fees and expenses, of the S&P 500 Equal Weight Industrials Index. The fund typically invests at least 90% of its total assets in the securities that make up this underlying index, which includes all components of the S&P 500 Industrials Index. Its top 5 holdings include Southwest Airlines at 1.42%, Boeing Co. at 1.40%, Dayforce Inc. at 1.39%, Paycom Software at 1.34%, and United Airlines at 1.34%. It currently yields 0.99% with a dividend growth rate of 7.8%. It had solid total returns over the 3 and 5-year marks, and had better returns than the category's average return over the past decade. It has an expense ratio of 0.40% and $653.71 million assets under management, with a 22% turnover. The fourth and final ETF for today's analysis is the iShares MSCI USA Quality GARP ETF, ticker GARP. This investment aims to mirror the MSCI USA Quality GARP Select Index, representing the large and mid-cap segments of the US equity market. It typically invests at least 80% of its assets in the index securities, while allowing up to 20% in futures, options, swap contracts, and cash equivalents for additional growth potential. Its top 5 holdings include Microsoft at 5.29%, MasterCard at 5.08%, Apple at 5.02%, Nvidia at 4.75%, and Meta at 4.21%. It currently yields 0.37% with a dividend growth rate of 3.7%. It had outperformed the S&P 500's total returns over the past 5 years. It has an expense ratio of 0.15% and $322.66 million assets under management, with a 53% turnover. It is ranked 11th out of all 89 large growth ETFs. Today we have looked at 4 gold-rated 5-star ETFs that we were interested in analyzing. I would like to thank you all for staying till the end, and I wish you all have a successful investment journey. For more content, kindly like and subscribe.